Good morning, everyone. How's everybody doing this morning? Hey, Juan, how are you? Hey, Raj. Lonigan, how are you guys doing? Moran, how are you? Good morning, good morning. Well, hope everybody had a good weekend. I actually caught a little inventory correction trade, and I wrote that up and put it in the room if you scroll back a little bit. Hey, Gerard, what's going on? Welcome, everybody. Hope you had a good weekend. Welcome to the Trading Syndicate. I'm JJ. And so we have markets are functioning nice and normal. We had liquidating inventory into wholesale hands, now being resold in the night market for profit, right? That's nice normal behavior. You get a liquidation, that liquidating inventory goes into wholesale hands, resold into the retail flow for profit, right? Because that's how a market works. We got a big gap, right? Our gap is what, 63.59 down to 63.09, so there's a 50-point gap. Hey Dan, how you doing? I call this a supply gap, right? There's supply in this gap. Those are trapped longs that are in this gap. When we have a gap up, they're trapped shorts. When we have a gap down, they're trapped longs. Pretty simple, right? Can you guys hear me? Hello? Oh, it's your speakers. Okay. Uh, all right, good stuff. Every once in a while, somebody will say they can't hear me, so I just want to make sure you can. So I took a little short. I came in and I shorted 91 and 3/8 on 4 contracts up here. I had my stop here above the overnight high, and I covered. I covered at 89. I covered a little early, right? I could have held that trade a little bit longer, actually, quite a bit longer. But I wasn't thinking that it was going to liquidate like that. And the reason why I wasn't thinking like that, because I forgot that we are not in the uptrend anymore. Now we are on the back end of the move, right? We are on the back end of this move, so all of that inventory is falling into us. So shorting is good at the right time. So, hey Petra, how are you doing? So let's see, right? We always want to short the back end of the move, right? Everybody gets caught doing this, right? This is that move that we want to short the back end. And it's hard to figure that out, but after a while you'll get it. It's just a matter of repetition. This weekend I'm working on something. I've been working on something for you guys to hold trades longer, and but it's not to be messed with. And what it is, I call it the scalable scalp. What we learn from scalping can teach us to hold trades longer using the same methodology. Um, so what we want to do is we want to scale up in size and then scale up in time. Right? I don't think a lot of you realize that if you scale up in a little bit in size, you can get paid quite nicely. When you go from 2 to 3 contracts to 5 to 10 on quick trades in and out, you can do quite well. So that's one way to do it. The other way is to hold it longer, which involves quite a bit more risk. Quite a bit more risk. No, Mike, the stops still have to be in the same place. You still have to respect the structure, brother. Because the stops are the reason when the trade stops working. When the trade stops working, when the business reason for the trade goes bye-bye, disappears, goes away, we've got to be out of Dodge, right? It's just, otherwise that's when we get into trouble. And it's harder to do that on longer time frame trades, right? Um, so anyway, I'm working on it. Well, I'll have that out hopefully this week. Um, yeah, the scaling up in time and size. Yeah. So I'll be working on that. That'll be put out in the room this week. We'll probably do a webinar on it, um, or like a special session in the room. Maybe do that on Wednesday or something. Should have it ready. So what do we do this morning here? We have overnight inventories about, oh gosh, probably about 80-90% long. It's already corrected a little bit down to 62.80. Right. Let's go take a look and see what we're looking at. To the downside, for longer term traders, your downside level is this 62.40. If we take out 62.40, then we can get into this weird purple colored zone. If we don't, and just remember, because we are right back in the cost basis of the market, just really go over this quickly before I move on. I think it's important for you folks to understand that your cost basis is here, right? This is the cost basis that we launched out of, right? So if we moved out of this cost basis here, right, that's all of this, we took it and sold it, put it back on sale. If we don't break these levels, just so you know, right? I know everybody thinks it's the end of the world liquidation. I saw actually a fairly intelligent guy on Friday go, is this the beginning of a bear market? And I don't know, after 2 days of liquidation, are we in a bear market? Or is this just an inventory correction? I don't know. I don't know. I mean, usually you don't go right from bull to bear. You go from bull to balance to then to bear, right? But, everybody gets 1 day of selling and whew, they're all ready to like, that's it, it's done, it's over, right? Going out of business. I don't know. I don't know. I'm just saying, just don't get sucked into the narrative. If the chart doesn't break 62.40 this week, it's going to go sideways while we absorb all of this like that, right? And remember, it's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. There's only 11 days of inventory. It's not like we have 3 months above us, right? We only have 11 days of inventory above 6309, 6306. Right? It's not that much. It's more than a day or two, but it's not like we have 6 months of inventory above us. Right? And the overhang in this market gets cleared out pretty quickly. So just remember that. Also, the fact that overnight inventory is long and we can't take out 62.50 on the bottom, right? 51 and a quarter is our low. these are small clues. Like it's not, nothing's written in stone yet, but the market will leave you clues. It will tell you, right? It will tell you what it's trying to do. So let's go take a look. It's my balance zones. Now my balance zones are a little, I don't know, but they did help. My zone is 62, 63 quarter to 67 and 3 quarters. Double it to 67 and 76 and 3 quarters. Double it again to 94. This is what made me take the short. And earlier, I actually did 2 trades. I did a test trade here. I shorted this area here, and I got stopped out. And then it came back and did this, and then I re-shorted it, and that's when it broke. So the first trade was a scratch, and I was too early. The second trade is the one that worked out. So let us see what we do now. Inventory is still long. I don't know, Raj. Right? It was a fairly major sell-off, and we do have a big gap above us. That's why I'm not going to say short squeeze right away and all that stuff, right? Also, everybody talks about how August is a down month. You know, so let's see. I don't know if they shorted on Friday, Raj. I think that was an actual liquidation, right? It's not always just shorting, right? When we took out, when you have a big gap, you can, here's how you tell the difference, Raj, right? The fact that we have a 50-point gap above us means that there was liquidation. It's not just short selling. You know what I mean? I'm sure there are some people who are short, but there is supply above us for the first time in a while. So that's why I'm kind of, we'll see. I mean, stranger things have happened, right? Yeah, it was, of course it was bid off. It was bid off, and they just pounded it out, right? Right, they just sold it right to cost basis, right? It's the same as when you go to that store that you go to every day, right? They sell their crap right back down to where they bought it. All right. VWAP is at, sorry, VWAP's right here at 77. So we haven't got down there yet. We've been in distribution above VWAP all night, right? As you can see. Let's see where. We're right in the middle of this purple zone, right at 85 and 3 quarter, 86. The next group of sellers are going to be here, 88 half. Okay, there's a seller at 86. That's good to know. Thing about this market is it always seems to, when you completely get everybody short. That's why I was saying that 6240 level is important, because if we don't break it, it'll turn around and spin back up on us. And I think that's another reason why scalping is a really smart thing to do, even if you're a larger trader, You should scalp around on a daily basis to get a sense of the order flow. I think that's important. Because then you'll really get a sense of where the bids are, right? So say you wanted to do a large short position today. How can you determine, right? Say you wanted, you're a larger trader and you're thinking, okay, maybe I'm going to put on a short position. Well, you can see there's bids at VWAP, right? So we're in the front end of the move. We had an inventory correction, right? If you just look at today's, little up movement, right? So you know that there's bids here at 79.80. They're front running VWAP. So if you were putting in a short position, you wouldn't want to be shorting down here, right? Sorry, Mike, I don't understand. Can't we just watch the tape for order flow? Why does it have to be me trading against it in order to get info about the order flow? Because you can't actually get a feel for it until you stick your hands in the dirt, Mike. You got to put your hands in the dirt, brother, and you got to feel around. I mean, you could do that if you want, right? I'm old school. I want to feel the bids. I want to know where the bids are, right? I'm not saying you're wrong. Just the way I was taught how to do it, especially people who trade on sim and stuff like that. I don't know. It's different when you actually put your hands in the dirt and you go stick your neck in there, you know? That's why I like the micro, because you can go and you can scalp with the micro, right? And if you get spanked a little bit, okay, it's 20, 30 bucks, right? See, in the old days, this is where it comes from, right? That comes from, like in the old days, if I wanted to short a stock, I'd go sell 100 shares or 500 shares of it and hit the bid. And say the stock was like $10. And say I sold 100 shares and it printed at 10. Okay, it printed flat. What if it prints at 10.01, 10.02? Oh, they're price improving. So I know their bid's underneath that $10 bid, right? Yeah, when I'm trading micros, it's like a couple of micros just to feel around. Oh, hey James, sorry I didn't see the question. Do you feel the Dow is harder to short? You know what? I have never actually looked at the Dow to trade it. I've always focused on the ES. Now I know people trade YM, but I don't really speak to a lot of them. Like every 3 months, somebody will ask me for a YM chart, and I start to do it up, and the person disappears. So I've never really looked at the YM. And the podcast episode with Howard Lindsay, that was a long time ago. I can't remember. All I remember, I think he had to leave early that day. I don't really think about the Dow. It's I've never really thought about it. Nothing against it. Yeah. Yeah, Howard's a pretty sharp dude. He's a sharp guy. We only had him on the one time. I hope he's doing well. Please send him our regards. But nobody ever asks for the chart. It's like the Russell, for example, right? RTY. Look at this recovery. Right back almost to the highs. I'm looking for sellers. If we get past 89, look for 90, 91 for them to sell into it. Yeah, the Russell, people will ask me for Russell charts, and it was really popular about 3 years ago, and then they all disappeared, all the Russell traders. Just like the DAX traders, they all disappeared too. Do I see a gap between 86 and a quarter and 85 and a half? Oh, right here. Yeah, that little space between the candles right here, Renee. I do. Nothing printed there. Sometimes that happens in thin markets, right? Actually, there nothing actually prints at that price level, and the market will trade at the next available price level. That does happen sometimes. Not a big deal. Huh. Now that was unexpected. The move from 79 all the way back to 90, that was quick. That was quick. Now, Raj, where are you? Right? I would imagine there's some pretty decent short-term short positions in here. That's exactly what you were talking about, Raj. That's what you see it on a shorter term time frame, right? Because what we did was we flushed out all the overhanging inventory into wholesale hands, and I would bet you some people got short between 81 and 85, and that's what's pushing us up to 90 right now. Because what we do two things when you liquidate a market, you flush all these people out and clean them out. Number two is you trap shorts, what we call dumb money shorts here. The smart money shorts cover, wholesale builds a position, and when wholesale's building a position, if the dumb money shorts are initiating there, right, then when we come in to buy, we're the third set of buyers. The dumb money shorts push price higher. Hey, you took me back to the 80s there, James, with that musical reference. Huh. So that was a little surprising. Now, so we've corrected inventory already before London opens. Let's see what happens when London opens. Yeah, yeah, they're the sellers right there. Okay. Getting to know this market this morning. That's good. See, this is why they tell you to be patient. They shouldn't tell you to be patient. They should tell you to be shrewd. They should tell you to be smart. They should tell you to stalk your trades like a predator when they stalk their prey, right? Let your trade come to you. So we have sellers at 91. Now let's see where we pick up a bid. Where will they sell it down to? How's the coin of bitterness this morning? Oh, it's back up over 112, isn't it? Or 113. I thought that liquidation would last a little longer. Hmm. we have for news today? Anything interesting? As you can tell, I'm totally prepared. Factory orders at 10 o'clock. Tomorrow, U.S. trade deficit, PMI. Nothing Wednesday. Jobless claims Thursday. That's good. I don't mind. A light week is fine. I'm perfectly happy with a light week of economic news. We'll just let the order flow do its thing. I can't believe they want you to pay for CBS Market Watch. That's crazy. Geez, look at this. Right back up to that 91. I don't see a trade quite yet, folks. I was really surprised at the bids that came in above 85. Listen, wait. See what the cat drags in. Yes, Confessions of a Market Maker is our podcast. Definitely. Have I looked at Microsoft? Yes, I have. Not over the weekend. I was a little lazy this weekend. I didn't do my chart review and all that stuff. Okay, a little distribution here. A little selling coming in on the London Open. Right down to the point of control. Hmm. Strong reaction at 86, 87. So what did we just find out? When we had this liquidation down, right? And then when London came in and liquidated, what did we do? We found the bid here. So the bid was here. It is moved up now to 85 and 3/4. So keep that level on watch, right? So if you are thinking about shorting and it can't break 85 and 3/4, your short's not going to work, right? And this way you can trade with some tactical information, right? Hmm. Okay. Distribution here. No trade just yet here, folks. Let's see if we can take out that 91. No, still a seller at 90 quarter. So in case you're wondering what I'm doing, what I'm doing is I'm looking at these rotations. So currently the market, all it's doing is it's rotating back and forth between 87 and 90, right? When we liquidated, the wholesalers picked up some cheap inventory between 79 and 82. We also got people trapped short under 85. So we're using the trap shorts as support. And we're getting rid of what we bought here. Right? If you went and looked at, say you went and drew a volume profile of the move down, you'd see it. So you'd see that liquidating move down, right? You see right here? See that big chunk? So the market's liquidating, liquidating, liquidating. It hits that area here, right? And as it liquidates out, you can see this is probably where those shorts got trapped. Why? Because when we came here, we stopped short. A lot of people look at volume profile, but they don't know how to decipher it. What you want to do is look at position, right? Position and cost basis is everything, right? So if we take out those sellers and we get above 92, then you'll have clear sailing. There'll be less overhang. Short term, not longer term, but short term. Does that make sense, you guys, or have I had too much coffee? Let me know. Once you start looking at markets in a tactical manner, your whole life will change. Because you can actually figure out what the heck's going on instead of all this silly talk about randomness, right? Oh, okay, what's next? I think we might try and put in a new overnight high. Let's see if we can get past 92. It's a bit of There's some traffic up there that you have to get past. What was that? Oh, why did you just watch the offer? It's I'm glad the 0 and 1 Mafia are doing their thing because you guys make the market much more precise, right? The thing is, trading is still the actual for retail, right? Now I'm saying like if you're in a hedge fund or something, you got to have an edge because that's a different story, and you'll have algos and all that sort of thing. But as a retail trader, it's still pretty much poke them in the eye and hit the bid, right? You got to find the bid, right? And once you find the bid, see how we found the bid at 85. So anyone thinking of going short on the London Open, if they didn't short and cover really quick, now they're trapped under 85, right? And we saw it from the volume, right? Now as we creep higher, right, there's still a seller at 92, which is good. It's good that we have a seller at 92 because we don't want this thing getting out of hand. So yeah, basically these zones, that's the cost basis times 2, times 4, times 8, right? So let's take out that overnight high. So if we take out the overnight high, it'll create some buying. There it is. Now, when it takes out a high, this is how you should look at it. If you are someone who is a breakout trader, what you typically in a slower market, if the market breaks that level, it'll create buying because the stops will start firing off. But as you notice here, it took that level out and then came back underneath it, which means the large sellers are sitting there waiting. And when it took out that stop, they all sold into it right away, right? Why did they do that? Because they see that there's limited buying, right? Once the market starts offering 94 and starts bidding 93 and a half, your breakout is more likely to work. Now, I don't buy breakouts, right? I sell supply into a breakout because the breakout creates buying that you can sell your position into. That's what smart traders do. That's why a lot of breakouts fail because people go to buy it, but they don't realize that all the smart money is selling into it, right? Breakouts tend to work better in markets that are a bit more active because there's more follow through buying and the sellers will let it breathe by letting price go higher so they can bang into it here, right? See how every time it gets up there, they sell into it. If enough people line up, then they'll start to raise price. Looking for 94 and 3/4. There it is, right? I tend not to buy breakouts because they are not really predictable. If we accept over 94 and 1/4, the next stop is 97 and 1/4, and then way up here is Friday's high at 63.11 and a half. just so you guys are aware. Look above and fail of 94 and 3/4. Look above and fail, Jiraj. That's why you don't buy the breakout, right? So in my coaching with you, have I ever taught you to buy a breakout? Have I ever told you to buy a breakout? No, exactly, right? I'm talking about breakouts because you got to remember there's a whole audience on YouTube that watches this that's not in our room, right? And they are breakout traders. So what I try and do is I try and help people who don't subscribe to what I teach. I try and help them muddle through their type of trading and show them the mechanics behind the trades that they take, even though we don't take those trades. Right? It's helpful to help other people because not everybody trades the same, right? So because if it was just in our room, I wouldn't even be talking about breakouts. But I talk about breakouts because we have another audience that's watching. And I want to keep them, a little something for everyone, right? So that doesn't mean I endorse breakout trading because for me, a breakout is something that you sell, right? Your stock into. It creates buying, right? So in your business, right? If you're selling your goods, you and your dad, it's like the other vendors. If their inventory all burns in a fire, then there's the breakout for you, right? You could charge more, right? But generally, on a slow night, those breakouts get sold into. It's a great way to move inventory. All those round numbers are kind of key levels, 6,300, right? Right? Yeah, it'll attract. Those round numbers are kind of like the hot nightclub or a popular moving average, right? Everybody kind of hangs out, right, at a popular moving average, at a round number, at a previous day high, previous day low. That's where that attracts more traders because everybody can see it. Right? Exactly. It's not predictable enough. I think I don't have data on this. But if you think about a breakout in an equity, they're probably better to trade breakouts in a single stock than on a futures product. And that's because there's less people who have big supply in a stock. Yeah, that's the look above and fail, Jiraj. Yeah, exactly. So this was a look above 94 and 3/4 fail, but I didn't call out the trade because I know that there's bids somewhere in here. So it really wasn't worth taking it for a couple of points. And you look at the candles, the lows are higher. Let's see what happens here. But this is the first decent liquidation we've had in a long time. Right? We got a fresh new month. Do some scalping, figure out where everything is. Just the way it's acting right now, if we can stay above 89 to 91, Let's see if we can take that point of control and move it up here. Can we distribute enough to get like 1,400 contracts off up here? Right? Move that point of control up. Good distribution. Use those trap shorts under 91 to hold the market up. You know? Let's see what happens next. It's Monday. Goodness me. I need some more coffee. Look, the candles are getting smaller and smaller. Harder to trade. Mondays are your best days? Oh, that's good, Trade Baker. Monday morning I'm a little slow. I had one decent trade, but should have held it longer. I'm short biased here, but the market's showing me that there are bids at not just here under 92. So that's not really confirming my bias. Yeah. So I was thinking, look above and fail, maybe we'll get some liquidation. Then I started seeing this happening with the candles, and I was like, no, it's not time to short. He's a seller at 94 and three quarters, but he's not really helping us. It's not aggressive enough for my liking. Here he goes, that slow creep up. And this is exactly that slow, creepy price action that sucks people into shorting, like it almost got me. And then all of a sudden, no supply. It's okay. It's a big fresh month. It's just distribution, right? Distribution's really tough to trade, right? Distribution is when a market goes up and goes sideways. And it happens in every time frame, right? You get this tiny range of rotation, and it's just the large traders getting rid of their product. And the smaller the distributions, the tougher they are to trade. Anybody have any questions? There's buying here, Gerard. It's just very slow. Very slow. See, we already went back down to the cost basis, right? When we liquidated down to 82. Yeah, Moran, exactly. Yeah. So right now they're buying it. It's just slow, right? It's just a slow. Not a lot of people coming in the store just yet. Yeah, I don't see any liquidation right now. Even though I am short biased, I'm not seeing any reason to sell this market because it stopped selling off at 90 and a quarter. So let them do their thing. Go get a coffee. Come back in a little while and see if it's any better. I would think so, Dan. I think they're going to try and sell as much as they can up here, as long as the buying holds, and then they'll put it on sale. Definitely. Till then, just chill out. Wait for your trade. No sense over trading on a Monday morning. You know what I mean? We'll see. We shall see. Too early to predict right now. We know there are strong bids down here at 81, at 85, and now at 90 and a quarter. Right? So you can see the bid has moved up. First bid, second bid, third bid. Right? Yeah, and why, Raj? So what is Friday's value? Good question. Value area is the same thing, right, as cost basis, right? Yeah, so this is distribution above cost basis for profit. Good, good, good. Monday is when you come in. It's like when you go into work. You go into work and you go, hey guys, what's going on? Who do we have to call? What do we have to do? Right? Do your reconnaissance. Don't just jump in there and start firing off capital. Take your time. Let's see, we're going to go put in a new high. Fresh week, fresh month. No sense of urgency to execute right now. Thanks, everyone. We will see you at 9 o'clock Eastern Time. Appreciate you guys joining us and hanging out even in the boring price action. Come visit us at the Trading Syndicate. I think it's still Steve's running that $20 sale, so. And like and subscribe our videos. We really appreciate your support. I'm JJ, and we'll see you in a few hours. Thanks, Cisco. Mahalo. And we'll see you guys in a little bit. Bye for now. Thank you.